Silver price surge in 2026, geopolitics, industrial demand, and the global precious metal market. Introduction: the strategic relevance of silver in a turbulent global economy. Silver has re-emerged as one of the most strategically important commodities in the modern global economy. Historically perceived both as a precious metal and an industrial input, silver occupies a unique position in financial markets, technological supply chains, and geopolitical risk hedging. In early 2026, the metal has experienced one of the most dramatic price rallies in modern commodity history. International prices have approached the $90 to $100 per ounce range, while domestic markets in India have seen prices reach nearly 3 lakh per kilogram, reflecting both global economic pressure and localized demand patterns. The surge in silver prices is not the result of a single catalyst but rather a complex interaction of geopolitical instability, industrial expansion, technological transformation, and speculative financial flows. Military tensions in the Middle East, particularly involving the United States, Israel, and Iran, have intensified investor demand for safe haven assets. At the same time, structural demand from solar power generation, electric vehicles, artificial intelligence infrastructure, and electronics manufacturing has created an unprecedented baseline consumption for silver. These overlapping forces have reshaped the global silver market and elevated the metal to a central role in the evolving economic order. Understanding the dynamics behind this price surge requires an examination of several key factors: global macroeconomic uncertainty, the evolution of industrial demand, regional price disparities, financial market speculation, and the structural transformation of commodity markets in the 21st century. Historical context: silver as money, commodity, and strategic assets. Silver in ancient and medieval economics. Silver has played a foundational role in human economic systems for thousands of years. Long before modern banking and digital currencies emerged, silver served as one of the primary forms of money. Civilizations such as ancient Greece, Rome, Persia, China relied heavily on silver coins to facilitate trade and taxation. In many societies, silver functioned as a backbone of the monetary system because it was durable, divisible, and scarce enough to maintain value. The global silver trade expanded dramatically during the early modern period, when large deposits were discovered in the Americas. Spanish colonial extraction from mines in Mexico and Bolivia flooded global markets with silver, enabling the expansion of international trade networks connecting Europe, Asia, and the Americas. Silver became the medium through which Chinese silk, Indian textiles, and European manufactured goods were exchanged. Although the global monetary system eventually shifted towards gold-backed currency and later fiat money, silver retained its status as a store of wealth and a hedge against economic instability. The transition from monetary metal to industrial resource. During the 20th century, silver's role gradually shifted from primarily monetary to increasingly industrial. The expansion of electrical infrastructure, photography, and electronics created new applications for silver that dramatically increased industrial demand. Silver possesses the highest electrical conductivity of any metal, making it indispensable for electronic circuits and advanced technological systems. As modern economies became more dependent on electricity and electronic devices, silver became deeply embedded in industrial production chains. By the early 21st century, silver demand was no longer driven solely by jewelry and bullion investment, but by technological application that requires its unique physical properties. Global silver price in 2026. Market overview. International market prices. In early March 2026, the global silver markets are trading nearly $93 per ounce, following a historic rally that pushed prices above $120 per ounce earlier in the year. This surge represents one of the most significant commodity price movements in recent decades. The international silver market has experienced extraordinary volatility through the past year. Prices have risen nearly 195% compared to the previous year, reflecting both speculative momentum and structural shifts in supply and demand. Commodity traders, hedge funds, institutional investors have increasingly viewed silver as an alternative to gold during periods of geopolitical instability. Unlike gold, however, silver has a far greater sensitivity to industrial demand cycles, which amplifies both upward rallies and downward corrections. Domestic silver prices in India. India represents one of the largest physical silver markets in the world. Domestic silver prices have closely followed international trends but are also influenced by local demand patterns, currency fluctuations, and taxation structures. As of early March 2026, the silver price in India stands nearly 2.94 lakhs per kilogram. However, prices vary significantly across regions due to transportation costs, demand intensity, and local consumption traditions. Southern Indian cities such as Chennai and Hyderabad often command higher premium compared to northern markets such as Delhi or Mumbai. These regional price differences can sometimes exceed 30,000 per kilogram during periods of high-end demand. Silver consumption in India is deeply tied to cultural tradition, religious ceremonies, and household wealth storage. Unlike many Western economies where silver investment occurs primarily through financial instruments, Indian markets remain heavily dependent on physical bullion purchases. Geopolitical tension and the safe haven demand. Conflict in the Middle East and investor behavior. One of the most significant drivers behind the recent surge in silver prices is escalating geopolitical tensions in the Middle East. Military confrontations involving the United States, Israel, and Iran have created widespread uncertainty across global financial markets. When geopolitical conflicts intensify, investors tend to move capital into assets that are perceived as safe havens. Precious metals, particularly gold and silver, historically serve this function because they are not directly tied to government debt, corporate profits, or currency fluctuations. During periods of war or international crisis, precious metals often experience sharp inflows of capital as investors seek protection from volatility in equities and bonds. Silver has particularly benefited from this trend because it offers a lower entry price compared to gold while still maintaining a reputation as a reliable source of value. Economic sanctions and commodity market disruptions. Geopolitical conflicts can influence commodity markets through supply disruptions and economic sanctions. When countries impose trade restrictions or military blockades, global supply chains can become unstable. Such disruptions create inflationary pressure across multiple sectors, particularly energy and industrial metals. Rising oil prices, for example, increases manufacturing costs, transportation expenses increases, indirectly affecting the pricing of metals such as silver. Investors anticipating inflation often increase their holdings of precious metals, further amplifying price movements. Industrial demand, the structural driver of silver prices. Silver in solar energy and renewable power. One of the most important long-term drivers of silver demand is the global transition towards renewable energy. Solar photovoltaic panels rely heavily on silver because its unmatched electrical conductivity. Each solar panel contains small quantity of silver paste used in photovoltaic cells. When multiplied across millions of panels installed globally, the cumulative demand becomes enormous. Governments around the world are investing heavily in renewed energy infrastructure to reduce carbon emissions and achieve climate targets. As solar energy capacity expands, the driver for silver continues to rise steadily. Artificial intelligence and data center infrastructure. Another rapidly growing source of silver demand comes from artificial intelligence infrastructure. Large-scale AI systems require massive data centers filled with high-performance computing skills. These facilities depend on advanced electronic components, semiconductors, and cooling systems that utilize silver in various conductive applications. As AI adoption accelerates across industries such as finance, healthcare, defense, logistics, and physical infrastructure supporting these technologies will require increasingly amounts of silver. This technological demand creates a structural floor beneath silver prices that didn't exist in earlier decades. Electric vehicles and advanced electronics. Electric vehicles represent another critical driver of silver consumption. Modern EVs contain complex electrical systems, battery management technologies, and power control units that require silver based conductive metals. As global automotive manufacturers transition towards electric mobility, silver demand is expected to increase significantly. In addition to EVs, silver remains essential for smartphones, laptops, medical equipment, and telecommunications infrastructure. The digital economy therefore relies heavily on the continued availability of silver. Market volatility and speculative trading. Commodity futures and derivative markets. Silver prices are not determined solely by physical supply and demand. Financial markets play a major role in amplifying price movement through derivative trading. Commodity exchanges allow investors to buy and sell silver futures contracts, enabling speculation on future price movements. Large institutional investors, such as hedge funds, frequently use these instruments to gain leverage exposure to commodity markets. While derivatives market improve liquidity, they also introduce volatility. Sudden changes in investor sentiment can trigger rapid price swings as traders adjust their positions. Exchange traded funds and retail investments. Exchange traded funds (ETFs) have made it easier for retail investors to gain exposure to silver without purchasing physical bullion. These financial products track the price of silver and allow investors to trade shares through stock exchange. Digital investment platforms have further democratized access to precious metals. Mobile application, fintech platforms allow individuals to purchase fraction amounts of silver with minimal capital. This expanded participation increases market liquidity, but also allows us additional layers of speculative behavior. Regional market dynamics in India, cultural and religious demand. In India, silver consumption is deeply intertwined with cultural traditions. Silver utensils, ornaments, ceremonial objects are commonly used during religious festivals and weddings. Many households purchase silver as a form of long term savings, particularly in rural areas where access to formal banking services may be limited. These cultural factors create consistent baseline demands while it remains relatively stable even during economic downturns. Conclusion: Silver's role in a changing global system. The surge in silver prices during 2026 represents the intersection of several powerful global forces. Geopolitical instability has revived silver's role as a safe haven asset, with technological transformation has created unprecedented industrial demand. Financial markets, cultural consumption patterns, and regional economic dynamics further complicate the metal's price behavior. Silver is no longer merely a secondary precious metal following the gold movement. It has evolved into a strategic resource essential for functioning of modern technological civilization. As the geopolitical tension persists, the global economy continues to transition towards electrification and digitalization. Silver will